I guess we are ready to roll. We could join. We could wait for a minute. So we are now live, right? Great. So, yeah, hi everyone. I am Akhand Tiwari, partner at MicroSave Consulting. A warm welcome to MSC's webinar on catalytic interventions for better CICO management. Good morning, good afternoon, and good evening to all of you. MSC has extensive experience in assessing and strengthening CICO networks across the globe. And we work with a host of financial providers and agent network managers to streamline the gaps in the networks. And agents across the world face many challenges in managing their operations and sustaining their business. In India, around 2018, we started looking at agent management problems to discover solutions that will work for the market. And we did this across the spectrum, at the ground level with banks and agent network managers, while supporting policymakers with evidence. This webinar today aims to showcase our learnings from these experiments and pilots, not just from India. We'll also draw examples from our work across the globe. We'll also have industry experts speaking on how the industry can support CICO agents for an inclusive last mile delivery system for financial services. CICO is a critical sector. In 2021, as per GSMA, there were 9.1 million registered mobile money agents. And if we add banking agents and other type of agents along with these mobile money agents, the numbers would easily cross 11 million plus agents. And these are the agents who did not stop operating even when the commercial branches were closed during the pandemic. These agents are resilient. They borrowed money from friends and family members. They continued banking operations also and supported the government, specifically in places like India and Indonesia and other places, to disburse assistance funds to vulnerable people. I actually always remember an agent, Reena, in Raebareli, in India, as someone who can get things done. She used 3 fintech platforms. She was registered with them, and she facilitated financial transactions using all. She always said, no customers who comes to my outlet should go back disappointed. Agents of today have a vision that can extend beyond cash in and cash out, a vision that can make the last mile customers economically, socially, and financially inclusive. And this is exactly something that we would like to hear and understand a bit more in today's conversation. With this, I would like to invite our first speaker of the day, Dr. Pawan Bakshi. So Dr. Bakshi is the India lead for financial services for the poor team at the Bill and Melinda Gates Foundation. He has over 25 years of experience in driving large programs covering strategy, regulatory, and policy support, infrastructure applications, etc. He has a work which is across geographies. So Pawan, welcome, and over to you.
Thank you so much, Akhand, for setting up this stage, and also I think a good introduction, which I don't think I'm worthy of, but nevertheless, thank you so much. The topic of CICO networks in India is very, very pertinent and important, and we'll talk about it as we go along. To start off with, universal financial inclusion has been one of the significant development priorities for I think developing countries over the last few decades. Both governments and central banks have undertaken a lot of initiatives to ensure access at affordable prices of financial services across all sections of society, especially folks in rural and poor communities of the world. In terms of where India are, and you spoke about the importance of CICO networks. Let me tell you how we see it. We see it as a bridge between the analog and the digital world, and we see a lot of customers who fall in the digital divide utilizing the services of CICO agents to move ahead and start doing transactions and building trust in the ecosystem and start doing transactions themselves over a period of time. In terms of the number of agents in India, you would be surprised to note that about 87% of total banking outlets in India are banking agents, or what we call as business correspondents, or CICO agents in other words. The government introduced these agents way back in 2005, 2006 to offer a low-cost alternative to branch networks. And we know for sure that having a branch which has is a brick and mortar branch with a whole lot of people involved in that, the branch is pretty expensive to maintain, and specifically in deep rural areas where not enough footfalls will justify the high cost of running a brick and mortar infrastructure. The official figures of 2020 indicate about 1.6 million plus agents across the country. But we know that the agent network has evolved, and there are multiple types of agents who are now arriving on the scene, which includes agents or post-bank agents, new age agents, and of course the traditional agents who are dedicated and exclusive. According to our estimates, we could be in the range of about 2.2 to 2.4 million agents in the country today. And Anil, in his discussion, will talk about the new models and the typologies in India and how they operate in his session. From where we come from, the growth has been really phenomenal. India has also, as a result, made a lot of progress towards serving its unbanked and underbanked population, and these agents have offered assisted transaction services that has helped digitally excluded population connect with the mainstream financial service providers. To give an example, in the last 4 or 5 years, the PMJDY accounts, which started way back in 2014, we've seen about 450 million new accounts opened in the last 5 years, or last 6 years. And a large portion of them have been as a result of the BC network in the country, who've assisted the banking network provide these kind of services to the customers. The CICO model, unfortunately, while we've expanded, has faced and continues to face some level of implementation issues. We think that CICOs can deliver a far better and more sustained level of services and a sustainable, I think, business model for financial inclusion in India. And despite the progress that we've made, I think we still have some distance to travel in terms of consistent quality of service, liquidity management, training of agent level frauds, and customer protection are some of the challenges that are appearing not just in India, but I think even globally. And it's a good stage to discuss this and understand what's happening around the world and talk about issues and challenges, how we're grappling with it, and how other parts of the world are grappling with it. Also, additionally, I think it's important to highlight that CICO economics continue to be a challenge, specifically in deep rural areas where enough footfall is a challenge. Our estimate is that about 20 to 25% of agents in India are conducting their agents with wafer-thin margins, and maybe a few of them even incurring losses, and are only sustaining the business is due to some banks offering them a very thin level of incentive to continue. And there is a likelihood that the segmentation we are seeing now in the marketplace is as a result of that ability of the agent to do the number of transactions that they have to. We've seen MSC's agent lifecycle framework, and we believe that to analyze and address these challenges is a useful way of looking at it from that angle. And I think the team will talk about the results that they've gone and seen out of these pilots. One of my favorite the areas is that how the use of behavioral interventions, specifically communication, can really help the providers, as opposed to the conventional view that women don't use banking services as much. MSC and Airtel Payment Bank found that women users opened account and maintained an average balance in their account, which was over 50 times higher than those women who opened accounts at control agents. So Airtel Payment Banks targeted women users and used unique communication strategy to reach out to women. Customer awareness actually led to higher footfall at agent outlets, leading to a 33% higher income for Airtel Payment Bank agents in the treatment. Behavioral communication outcome comes out as a handy tool. And in session 2, Dave, my colleague, will be discussing some of these results with Rachit and Abhinav on the lessons from the CICO experiments in India. Before I stop, I want to pick up another critical challenge of, in terms of the CICO landscape. We believe that the gender of the agent plays an important role in attracting underserved women customers. In India, there were about 8% agents in 2017, and this percentage has slowly increased to about 11%, which is a definite improvement, but far below what could ideally be. Now, recruiting and onboarding more agents is an integral part of the ecosystem, but what we'd love to also discuss at some point of time is that what would ensure that women are more empowered, can handle larger number of customers, and can be mobile enough to be able to do justice to this activity to them for themselves as earning revenues and for their customers and serving them in the right way. In session 3, Hillary and Graham and Samuel and Sanchita will discuss with other critical factors the impact of inclusive last mile delivery on financial services. I'm looking forward to hearing from all our co-panelists, and I welcome all the participants and the speakers, and I look forward to discussions and insights from this today. Thank you so much for your effort and time, and I'm really looking forward to this engagement. Thank you so much. Over to you, Akhand.
Thank you, Pawan. Thank you so much for opening the webinar, and I especially like the mention of the frameworks and how the behavioral communications can work, really do wonders for the agent network service providers. So with that, I'd like to invite Anil, Mr. Anil Gupta, for the next session. Anil is a partner at MSC's digital financial services domain, and he holds over 2 decades of experience working, and he's worked with development banks, commercial banks, funding agencies, a lot of experience of microfinance, and he's going to talk about our work on identifying the segments of CICO in India. So welcome, Anil, and let's hear from you.
Thanks, Akhand. I need to share my screen, so let me begin with that. I hope Akhand, I'm like this. My screen is visible.
We can see it.
Okay, thanks. So first of all, thanks Akhand, and thank you, Pawan, for setting the context. In fact, you covered some bit of it, like what I really want to cover in my session. And first of all, I want to say good evening to all of you from India, those who are tuning into this webinar. And before I begin, actually, let me begin with a statement. And the statement is that most of the people prefer to visit a bank branch if they need to do some banking transaction. Well, most of us would not like to believe it. For them, it is more like a history, as we are so comfortable with digital or internet-enabled banking. I wish it could be true for the masses, and that includes over 70 to 80% of the population in developing countries. Realizing the challenges of branch banking, as Pawan also highlighted, in terms of high cost of providing services, and similarly high opportunity cost for people to travel a long distance, we have seen the advent of innovative channel, what we call alternate channel. And as part of the alternate channel, two things which have come up. One is machines, what we also know as ATM or automated teller machines. And second is human interface, which are popularly known as agents. Interestingly, agents are known by different names based on the local regulations and the agencies that has set them up or promoted them. Since they mostly perform the function of cash in and cash out, they are also popularly known as CICO, and some of my colleagues prefer to call CICO. So this is how it is. And India began its journey of banking agents way back in 2006. The regulator has made several changes, allowing various entities to set up and operate agents in India. And they provided a very wide or a broad framework of regulation around that. By regulation in India, they are known as business correspondent or BCs. As I said earlier, there are various names for the same agents. In India, some of them some call them CSP or customer service points, retailers, merchants, and few other names. For the purpose of this discussion, let us call them CICO agents or BCs or simply banking agent, and that serves our purpose. Pawan mentioned about agent lifecycle management. So before I go into the different models that we see in Indian market, let's first try to understand the agent lifecycle of CICO agent. Like based on our work, what we have done is that we have broadly divided this into two parts. One is setting up their businesses, and second is sustenance as they start working. For setting up, typically agents go through a process of selection based on certain parameters and onboarding. They also receive training in various forms and shapes and also undergo certification, which is sometimes mandated by regulations, say for example in India. Once set up, they begin operations. For that, they have to do marketing and communication like any other service industry. To allow cash and account transitions, they have to manage their flows, both physical and electronic value. They also need to manage risks and handle customer grievances in case of any issues which arise during the course of transition. If things go well, they expand or grow their business, and if it is not the case, they can face disruption or they can face closure of their business. You can read through our detailed report that agents go through a series of emotions and actions during all these stages. And based on the life cycle stage, they also face challenges that they are unique to that particular stage. Let me turn to 4 classic archetypes that we see in India. We need to understand them better, more so in the context of great work that they have done by serving millions of underserved population in India. We have analyzed them across a host of factors. I'll talk about them a little later on. And let's talk about the categories of agent that we see in India. First one is quintessential or classic traditional agents. They generally are affiliated with very large banks, more so with public sector banks. They offer a range of services as allowed by their sponsor bank. The nature of services varies from bank to bank, and it is based on the contractual arrangements that they have. They are typically high cost, fixed kiosks, and give a feel of a small branch as you walk into them. A small variant of this model is known as BC Sakhi model. Sakhi is a Hindi word for sister. In that, a bank appoints an SHG member. SHG is a small group of 15 to 20 women typically in rural settings, and they act as BCs to provide limited banking services in the hyperlocal area, typically the area in which they reside. Second category is what we call new age agents. In this new age agent setup, corporate BCs or the BC network managers take all the responsibilities after having a broad agreement with the sponsor bank. They are very high on technology and are able to onboard and train agents remotely. This is generally a low cost model, and a few like Pay Nearby, Spice Money, and ECO are major players here. ECO is already present among us, so they are going to discuss more about it. Many of these retailers, those who are part of new agent network, they also develop as merchants to accept digital payments. Another category that we see in India is thanks to differentiated regulation that we have in India for payments bank. Fino and Airtel Payment Bank lead this category. These agents also exhibit many of the features of new age agents and typically rely on low capex and mobile operations. Last category is fairly unique. It comes from India Post Payments Bank. And since they have dedicated GDS or Gramin Dak Seva, or what is popularly known as Dakia in India. The GDS is an integral part of India Post, which is the parent entity of India Post Payment Bank, and they have been providing mail services for decades. They were also involved with financial services in the past, and now they develop as agents of India Post Payment Bank. They have dedicated devices to provide services, mostly at the doorstep, which is something very, very difficult for most other type of network to really match. MSC has been working with different partners across the life cycle over the last few years, as Akhand mentioned about it. Our work covers a variety of agents across both the setting up and sustenance stage. We have worked and continue to support 2 large public sector banks, a couple of state rural livelihood missions or SRLMs, a few corporate BCs or network managers, 2 payments bank and rural financial institutions. We will also have some of our partners in next sessions, as Pawan highlighted, to discuss some of the work that we are trying to do, and we are trying to generate evidence around that. Our work so far has shaped our thinking and helped us bring this perspective with various nuances, which typically we miss while we speak about different type of agents. Now that we understand the 4 or rather 5 type of agents, if we include BC Saki as one of the separate categories under traditional agents, let us look at them across 4 fundamental parameters. This is how we are defining it. We are saying these are access, use cases, economics, and risk. Pawan briefly touched on few of them. What we have done is that we have plotted all the 5 agent categories across these parameters, and we also layered that with a bank branch so that we can do a in-depth analysis and try to understand that's what's really going on across different models compared to what's happening at the branches. So let's first look at the access, as it covers convenience, customer service, reliability, and trust. What we see is that most agent personas, they offer better convenience and customer services than bank branches. However, reliability in terms of service uptime and grievance resolution is something that service providers need to work on. Based on our various ground level studies, what we find that despite such a good access, only around 1 out of 5 customers prefer to transact at the agent point. Of course, this varies greatly across the state and probably across the banks. The second logical extension is moving from access to usage. Usage comes on the back of services or the use cases. We looked at account opening, assisted services, basic transactions, subscription, and top-up services. What we observe here that except for new age agents, almost all the agents, they open different categories of accounts because we have a variety of accounts. New age agents typically focus on basic transactions and also provide bill payments as part of top-up services. The network managers exercise control over what they offer and what they can offer. Traditional agents are able to provide an extensive bouquet of subscription services that includes various types of bank deposits. GDS or Gramin Dak Seva also provide third-party insurance services, and recently they have experimented with credit lead generation. To build the business at the last mile, agents need to expand the range of services that they offer. I think this goes without saying. This can bring about changes in the usage levels of financial services at the last mile, and it can be a win-win proposition for both providers, which are financial services provider, and agents. Providers serve customers at a reduced cost, and agents can get better remuneration and make the business sustainable. Third logical extension is economics. Pawan briefly touched about that. It is all about revenue, cost, and profitability. Not surprisingly, traditional agents, they earn the highest revenue considering a large public sector customer base. As they come through a rigorous process and with the onerous requirement of infrastructure, they incur high costs towards setup and operations. On the other hand, new age and payment bank agents have a low capex and turn profitable very quickly. This is one of the reasons why they are able to expand so fast across the country with millions of touch points. As Pawan mentioned, that the last data that we see in the RBI report, it talks about 1.5, 1.6 million agents, but the best estimates in the market suggest that we have something like 2.4 to 2.5 million agents. GDS is a completely different model here. They have consistent income with no direct cost because the devices that they use to provide services, it comes from their parent department. And this differentiation is really important. Why so? Because we regularly talk and discuss about profitability without actually qualifying that with the type of BC agent that we are talking about. The last one is all about the risk. There are various types of risk like financial risk, operational risk, market related risk, strategic risk, and technology related risk. BC Sakhis, they face comparatively high financial risk in view of fake currency notes and transaction getting stuck. And they find it really challenging how to get it reversed. Since payments bank agents and new age agents depend upon distributor, which is another layer for a lot of their liquidity and other requirement, they face much higher operational risk. Market related or macroeconomic risks, they apply to all the models. New age agents run with a higher risk around regulation or lack of regulation for training and certification. This is something which we see in the Indian market very extensively. Traditional agents, they face higher strategic risk due to limited scalability of the model, due to the very nature of their model and the processes that they follow. On the other hand, new age agents and payment bank agents, they face different type of strategic risk as entry barriers are too low. Most agents, they continue to face technology risk due to centralization of technology systems. This varies from location to location, type of transaction, and many a times specific days when transaction volumes are higher. Beyond server availability, authentication using biometric is another challenge that most of the agents face, more so when they are doing interbank transactions. So let me try to conclude with two thoughts as we want to embark on the next generation of CICO, not only in India, but outside India as well. First, let providers and policymakers understand the nuances of agent personas. This will help optimize the network and offer better services to the customer. An in-depth understanding of the personas of each Indian BC agent will help us understand agents' motivation and needs. This will help us to use them to deliver financial services efficiently and ultimately drive usage among customers. Secondly, it is also important to understand issues such as perceived obstacles or problems each persona face. This will help the service provider deliver customized support to agents, thus limiting agent attrition, one of the major issues that we see in the market. For this, we can work on something like an agent index to help identify the skill gap among each of the persona, which like this skill gap perhaps constrain them from offering quality services to the customer. Knowledge of the challenges or pain points that agents experience across their life cycle help providers prioritize the specific support that agents need and required communication design structures that best suit each agent persona. Let us make a concerted attempt to strengthen the last mile so as to harness its power. millions of people are looking for a trustworthy place to do banking transaction, or else we will continue to see swelling crowds at the branches that they find difficult to serve. Thank you once again. Back to you, Akhand. In case anyone has any question or comments, please feel free to ask.
Thank you, Anil. Thank you for this great presentation and this dipstick into the CICO segments which are evolving in India. So I'll request all the audience, they can type in their questions in the chat box and we can take them as they come, and then we can have you and the other panelists also answer it. But I would like to move on to the next session. I'll hand it over to Dave Kim, who will be our moderator for the next session, Lessons from India to the World on CICO Innovations. Dave Kim is a program officer at the Financial Services for the Poor team at the Bill and Melinda Gates Foundation. He spearheads the work on cash-in and cash-out networks and financial health. And I mean, he has represented Gates Foundation across multiple working groups and organizations, including World Economic Forum, International Development, Innovation Alliance, etc. Thank you, Dave, for moderating this session, and I'll give it to you. Welcome.
Okay, thank you, Akhand. And hey, everybody, it's really wonderful to be here. I am really excited to talk about one of my favorite topics, which is CICO, or cash in, cash out networks. And today, I am just really excited to share the stage with two wonderful people. So Abhinav from Echo and Rachit from Airtel Payments Bank. So it would be great if we could actually have them join me up on stage right now, just as we get going. And what we'll do in the time that we have is split up the time in a number of different sections. One, we'll just talk a little bit about, one brief introduction, so you know who we are and the perspectives that we have on this challenge. And second, we'll talk a little bit about, or rather, we'll share with you all two videos that give a brief overview of some of the pilots that we've been working on. And then we'll switch over to a broader panel discussion. And in that panel discussion, I'll kick us off with a set of questions to explore some of the edges of what we mean by CICO and what are some of the interesting areas around the CICO innovation space. But think of this as an invitation and as a cue for all of my fellow viewers, fans of CICO here. I would love to make sure that it's not just the three of us up on stage talking, but I would love to create space for you all to pose your questions and help us as a broader community think really critically and rigorously about, hey, what is needed for us to truly improve the reach and quality of these CICO networks? So with that as a bit of a preamble, and again, as a bit of a long invitation for all of you to think about some of the questions you may want to ask, I would love to do a brief round of introductions. So Abhinav, I'll turn to you first. And maybe in terms of introductions, it'd be great if you can tell us maybe three things. One is a little bit about yourself. Second, a little bit about your organization. And third, if you had a magic wand and could solve one problem for your organization, agents, or customers today, what would that be? So Abhinav, over to you. And then Rachit, you're on deck.
Wow. You can certainly stump me with that question. So hi, everyone. Good evening. This is Abhinav. I started Echo in September of 2007. So it's been 15 years of continuously trying to solve cash in and cash out in India. And all I can share is probably we can spend another 15 years continuing to solve this. It's such an interesting, fast evolving, endlessly innovative space here that so much of work can be done here. Finally, if I could, I'm certainly not prepared for Dave's question, but if I had to choose, if we could put all the agents in one single template, and if one size fits all was a solution, that would be so much easier for all of us.
Okay. Oh,
unfortunately, it's not true though.
That's true. Oh, and what a great setup for the rest of the conversation. But thank you, Abhinav. I'm going to come back to that question, to your response, because it's fascinating. Rachit, over to you. The same three questions.
Sure. Hello, everyone. Good afternoon and good evening. I'm Rachit. I head strategy and investor relations for the bank. And in terms of what we do, we are a payments bank, helping last mile financial inclusion and also, supporting our urban population with some of the unique products that we have. In terms of one thing, the magic kind of, and again, very difficult to answer, and it's very hard to prepare for as well. So, if I had one, I would probably, take inputs what Vinod said and probably do a similar stretch, not just for our regions but all banking points in general, because there's so much to be done, especially in the Indian market. Again, each geographically it's very unique in terms of the requirements as well as how we can support. So if there was one fit that fits all, would really love to apply that.
Interesting. No, and I love that so much because the title of this session, I want to make sure I get this right, is Lessons from India to the World on CICO Innovation. And what I want to see with everybody here is that even within the Indian context, there's no way we can talk about this just with one label, right? Like there are so many unique contextual things that we need to call out. And while preparing for this panel, I was struck by the desire for customization and flexibility and like targeting of messaging, of support, and of activities. And it's a bit of a paradox, right? We want to give lessons learned for the world, and at the same time, one of the lessons is we need to be very context specific. So it's just something, a paradox that we'll hold onto. But I do believe that there are so many applicable lessons learned, both from the methodology perspective, but as well as content-wise, what we've learned, that I hope that people viewing this webinar from all over the world can truly benefit from. So what I'd like to do is I'm going to cue the MSC team to play two videos back to back. And it's a bit of a roulette. I don't know which one's going to go first, so we'll see. But we have two videos, one about the pilot that was done with Echo and another that was done with Airtel Payments Bank. We'll play this now as context. So I hope everybody will be able to view this, and based off of that, we'll jump right into the questions. So MSC team, hope that was enough of a vamp. Over to you guys for playing the video.
मेरा नाम कमल है और मैं जयपुर राजस्थान से बिलोंग करता हूँ और CICO में लास्ट 2016 से यूज़ कर रहा हूँ।
मंथली टर्नओवर 50 लाख के आसपास होता है। डेली बेसिक कस्टमर 40-50 कस्टमर डेली आते हैं, नए कस्टमर जुड़ते हैं 25 से 30।
पहले मैं जैसे कि शुरुआत से करता था, मतलब कि इसमें कमीशन थोड़ा कम था,
कम सर्विस थी स्टोर पे। अब कमीशन दोनों मनी ट्रांसफर और APS में भी कम, दोनों में कम था पहले। पहले सिर्फ 1 महीने का ही प्लान था।
नहीं, बेसिक प्लान में जैसे कि हमें ईयरली या हाफ ईयरली ऐसा कुछ नहीं देना पड़ता था बस, लेकिन वो चार्जेस ज़्यादा लगते थे।
नए जो प्लान आए हैं उसमें जैसे साल भर 365 दिन का प्लान है, 90 दिन का प्लान है।
अभी का जो प्लान है, जो हमने गोल्ड मैंने चूज़ कर रखा है, उसके अंदर मंथली करता है। आप चाहे मंथली कटाओ, हाफ ईयरली कटाओ, उसमें 30, 60 और 90 ऐसे 365 दिन तक के प्लान है। आप जैसे एक साथ पे करना चाहते हो एक साथ कर सकते हो, मंथली करना चाहते हो मंथली कर सकते हो।
लेकिन इको ने जो भी प्लान निकाले हैं वो पहले से अच्छे हैं।
अभी जो प्लान चल रहा है वो काफ़ी अच्छा चल रहा है, उसमें हमें बेनिफिट भी मिला है। पहले हमारे जैसे कि 6 रुपये में एक एंट्री जाती थी, अब वो 5.5 के समथिंग जा रही है, तो उससे हमें अच्छा ग्रोथ मिला, मतलब कमीशन भी अच्छा मिल रहा है। दूसरा AEPS में हमें कमीशन अच्छा मिलने लग गया, यानी कि पहले की 5-6 रुपये मिलते थे, अब 11 रुपये तक हमें मिल रहा है।
स्पेशलिस्ट जो प्लान निकाला इसने, ये वाला बिना डिस्ट्रीब्यूटर के स्वयं खुद काम करो इसके अंदर। अब किसी दुकानदार को तो अच्छा है।
अब लगभग करीबन 400 रुपये के आसपास से उसमें बचत है पहले से।
Intent is to kind of promote small deposits and micro savings into the account, and in this account they can deposit rupees 10 rupees also, and the intent is to develop the saving habits. So this is where we engage with MSC to help us design a suitable communication for them.
भरोसा खाते में तुम सिर्फ 10 रुपए जितनी छोटी रकम भी जमा कर सकती हो। सच में दीदी, खाते में जमा करने के लिए तो कम से कम 500 रुपए होने चाहिए ना? बिल्कुल नहीं रानी, जब बैंक इतनी पास है तो थोड़ा पैसा बचते ही उसे बैंक खाते में जमा करने में ही भलाई है।
After playing these audio clips with the specially designed script for them, now the women are taking interest in terms of they are listening to the audio clips and asking, questions to the retailers, to the BC agents to understand how do they open account and how they can, save more with us.
Okay. Thank you for the videos. Oh my gosh. What I love about watching these videos is probably watching Abhinav and Rachit's faces and reactions during this, not only to their videos, but to each other's videos. And this is what I love when working really closely with providers. They're like, oh yeah, that's pretty cool. How can I do that for myself? And you see the wheels turning already. So I am just so encouraged by this. And I know that for a lot of the audience members here, many of whom are so wonderfully familiar, I'm sure the same phenomenon was happening with you guys. Before we jump in, Akan, I'm going to just do a quick time check with you. Can you just remind me, how much time do we have? I want to make sure that we hit on the main points.
So Dave, it's 20 minutes that you have.
Perfect.
Right?
Great.
Okay. Yeah.
Okay. Thanks. Now that's more than enough. Then in that case, let's jump right into some of the questions. And Abhinav, this question is going to be for you first. And the question here is that actually in your introduction, you mentioned something about how you believe that, well, one, not only have you been working on improving the reach and quality of CICO networks for the last 15 years, you think that there's an additional 15 years worth of innovation that needs to happen here. So I would be curious to understand a bit more about this. Can you tell us a bit more about, well, what is driving that belief, and how do you think that CICO innovation will show up in the next 15 years?
Thanks, Dave, for the question. The reason I kind of mentioned that is look from a technology stack perspective. When we started this in 2006, 2007, we were doing all of this over feature phones, right? And we've seen, I think it went from feature phones to desktop to mobile application, right? That's been, from a tech stack, general tech stack delivery perspective, that's been one change, right? There was so much of manual processes that were involved while opening up of an agent, training of an agent, introduction of a new product, and some of these processes that were involved. And if you look at some of these supporting processes, now they are continuously changing. Now, honestly speaking, the level of technology and the capability of technology is continuously increasing. How many of us is genuinely using ML-based technologies to segment our agents? How many of us are using ML-based or AI-led technologies to even change the way the UX of the agents, that they what they see in real time is changing? I just want to bring out the points that the previous speakers, Pawan made, Anil made. I think Pawan made a very important point about women entrepreneurs, right? Women agents. How are the interfaces and interaction changing from when a woman entrepreneur is facing is an agent versus when a student is an agent, when a retail outlet is an agent. So my sense is that I think we'll continue to solve cash in and cash out, but we will continue to solve the same thing in far more intelligent ways in days to come, right? I think there's a really old Gates Foundation study which says the deeper you go with cash in and cash out, the better is your ability to do digital payment transaction. I think the next stage that we want to reach to is where you don't need CICO, right? And everyone's kind of earning digitally and you can do this. So now the thing is, I think that's far out, right? And especially in countries like India, which is like bombarded with absolutely fantastic technologies like UPI, etc. But I think the scope for innovation on cash in, cash out is tremendous. And the tech stack is getting better. The tech is getting a lot more intelligent. Now, how much of that power is one is able to kind of bring it out and give it in the hands of these agents and make the technology very, very simple and consumable for them to end up providing products and services very, very easily to their end consumers. I think that's something that is exciting me. And again, when I look back, I kind of always kind of go back, whenever a colleague is telling me that, the business is facing this problem, I often think, did I not solve this 3 years back? Right? And you tend to see these cycles come in, and when you take a step back, you realize that newer technologies are coming in, your products are coming in, your competition are coming in. People are kind of solving the same thing in different manners. So it kind of keeps you on your toes to keep innovating and going forward. And therefore, my statement that while we've innovated for 15 years, probably the pace of innovation in the next 10 years is probably going to be a much more hockey stick than what we witnessed in the last 15 years.
Wonderful. And what an incredible perspective to have. And imagine the type of impact we could see, especially for lower income communities in rural areas. If we see 10x more innovation happening in this space, right? That's the holy grail. That's the thing that motivates us, also keeps us up at night. But I think collectively we share that conviction.
Dave, if you allow me to make one last statement, probably the first time I met Anil, the first time I met Graham, we tried to solve for trust and customer experience and customer trust. After 15 years, we continue to talk about these things. That's the beauty of it, right? The level of delivery of, let's say, trust is concerned, customer experience is concerned, customer support is concerned, and all the risks that Anil pointed out, they all have to keep getting better as times go forward, right? And therefore, the point that I was making, we continue to solve the same thing, which is not a bad thing. It's a great thing because the environment is changing and you just have to up the level of product and service delivery that you have.
Oh, I love that. And I think that's such a call to action for all of us, saying that, look, just because you solved it or you think you may have solved it doesn't mean that you're done, right? And also there's something really interesting about the interplay between technology and touch, the tech and touch piece, which I think John Wan here from this audience talks a lot about as well, is so incredibly needed for the work that we do. And maybe I'll use that as a bit of a transition to Rachit. So Rachit, in the video for Airtel Payments Bank, you made the link between low customer demand and low customer awareness, saying, we think that's the reason why we're not seeing the uptake and the adoption and use of these different types of products. So maybe I'll plant two questions with you, and please take them as you go. One is, can you tell us a bit more about how you landed on low awareness as a main driver for this phenomena? And the second one is, look, at face value, the solution that was created seems so wonderfully simple, right? So tell us a little bit more about what was the process that you all took to get to this very simple and elegant solution. We'd love to understand both of those pieces.
Thanks, Jay, for the question. I think before jumping into both the questions, I'll give a brief about what Bharosa account really means and what was the target when we launched with that. Now we're talking about a target customer base which is low income to start with, again limited by their cultural hindrances. We're talking about low income women, and with the cultural hindrances they can't really go much in the market, so to say. There's cultural barrier. Second, of course, is a natural inertia of keeping money in house, not really going to the bank. And third being access and the respect that they would get even when they go to the nationalized bank branches, so to say. So to solve for all three, right, the Bharosa was kind of created to give them zero balance account. Like Harpreet mentioned in the video, the idea was also to kind of enable saving as a habit. The third, which is more the financial inclusion mandate that Government of India has been focusing on, was also tried to be served. With all three in picture, we tried to create a product. But now once we have a product, how do we reach out to the end goal, right? How do the end customer gets to know what the product is about? And that's where I think MSC has been of huge help, like starting with deep dives with the target audience to understand what it really means, what would enable them to trust the bank in terms of what they're delivering, and also the overall messaging, right? Like you said, the message was so simple, so intuitive, so acceptable that the uptick absolutely went up from where it was pre-MSC times, right? So talking about awareness side, I think I've touched upon that. The other, which was the face value in terms of creating more similar products, would say. Did I hear that right? Or you meant something else when you mentioned about face value?
Yeah, so at face value, so what I was saying there was, wow, the solution seems so simple, right?
Yeah, right.
And it's so elegant. And so I would love to understand, how did you arrive at this solution? I'm sure there was a whole bouquet of different types of solutions you could invent, everything from AI and machine learning to now.
Of course. So I think, taking cue from Abhinav also, I think data is something that has been a big enabler, so to say. But that's not something that really, worked in this particular case. It was, very deep level detailed questionnaire with, these help groups, so to say. These, women customers, having deep, engaging conversations to understand what would tick with them, right? Of course, MSC team tried different ways and means in different target groups, so to say. But this is something that emerged as probably the most easy and yet simple solution to implement. I think we have seen massive uptake. In fact, we have been kind of relaunching this across geographies. In fact, we are doing vernaculars now for the same message, so that people in different parts who are not Hindi speaking, so to say, can also understand the message, and we are seeing results there as well.
Got it. Okay, wonderful. I'm going to come back to what you just landed on. This is just, I'll come right back to that. But Abhinav, I'm going to come back to you. So in the video that we just watched, the video mentioned some impressive benefits from the pilot. It said there's more convenience, there's higher commission, improved flexibility. But perhaps for people who may be newer to how the model works today and what the before times were, can you tell us a bit more about the problem that you were trying to solve? I mean, it seems incredible that over 80% of agents have now adopted this new scheme. But what was life like before that scheme? What was the challenge from the agent's perspective?
Certainly, a couple of things. This brings me back to one of the other issues that was raised before about sustainability, right? And the sustainability is not only at the level of the agent, but also at network manager level, right? So as the market grew and as the number of participants increased, there was constant pressure to even create a sense of loyalty within the agent network, right? And one of our insights was how do we make it non-comparable to the other operators out there? That was one of the inputs, right? Else, the comparison is very easy between one operator versus the other operator. So we wanted to do things very slightly differently. Now, being different has its own risks, right? People, the industry is working in a certain manner. You want to turn the industry in a different way. Can work out, cannot work out is a different thing. But broadly speaking, one, we wanted to drive loyalty. The second one was that we wanted to be slightly different and slightly more difficult comparable within the ecosystem. After having implemented and learned some of the things that came out, I think the other thing that and this is also a problem that we continue to solve. Let's say we solved it a year back with MSC, we'll continue to solve it today, we'll continue to solve it 1 year later. Now, one of the things that I've certainly realized whenever we think about pricing is that, one of the most important questions to ask right up front is what are we wanting to maximize the pricing for, right? Do you want to maximize your margins, as in the network manager's margin? Do you want to maximize the earning of the agent? Do you want to maximize your market share with respect to the agent who do large amount of volumes? Or do you want to make sure that your market share is very, very, very high with the long tail? So these are questions that each of these operators, including ECHO, have to answer. And that's what we were attempting to answer when we did the pilot. And I think the video as intended tells the positive side of the story, which is that it certainly maximized it for a certain kind of agent, and absolutely 84% of people kind of took it. But right over a period of time when the pricing takes its own course, now more than a year has passed on, so we've collected a lot more feedback. You kind of that was the input, then there is a certain output. Over a long period of time, we've kind of realized what this pricing optimized for, right? So again, just to go back to your question, I think we wanted to differentiate and we wanted to create loyalty. We went in with a certain things. It certainly had positive impacts and a lot of learnings for us. We will, like I said, we'll continue to solve for it. And I think we are, as a team and as an organization, I think we are a lot more educated and literate when we go solve it the next time. And certainly one is that I'll attempt to understand, and my team will attempt to understand what's the willingness to pay here, and what is Echo trying to maximize in any pricing strategy. I think that's very critical to understand and answer for each organization.
Got it. And then just to follow up here is that, did anything happen during this pilot that either changed like your conviction or perspectives on agent networks? Or if not, like what set of beliefs were really hardened through this experience?
Couple of things. One is that, agents are latching onto platform like ours to maximize their earnings, right? And it is important for us to be able to maximize it. Now, at times, maximizing for them is not to our interest, surprisingly, right? Because at the end of the day, it's a mathematical equation, and only so much of margin is getting created, right? And I think what is humbling is that platform like Echo, Airtel, and many others who operate, we provide an earning opportunity to the agents. It's an humbling experience that they are latching onto these networks to make an earning. I think we got to prioritize that, and we have to solve. And maybe this is a tougher problem to solve. How do operators differentiate ourselves and make sure that we create the product differentiations and many other features, etc., where we are able to generate willingness to pay from the part of the agent for the network managers. I think the equation's not easy, but for 15 years we are solving it. We'll continue to solve it for the next 15.
Fair enough. Yeah. And then Rashid, like this is a question for you too. Actually, the same question. So during your pilot, where you looked at these different types of behavioral messaging and different content and channel plays here, did anything happen in this pilot that changed your perspective on how agent networks run, or was it more of a hardening of your convictions around the space?
So I think Abhinav rightly pointed out that incentive structure for the agents continue to be a key driver for them to be really active in the market. Having said that, I think there are a few things that we noticed, like how a simple change like a communication could increase the uptake by as much as 5x, right? And how in terms of when you reach out to the right customer and ask the right questions, you tend to get all the answers that you need when you do a GTM for a product like this, right? The third part, which is I think equally important, is how the product itself has evolved over this time as well. It also came through the feedback that we continue to receive from our end customer. For example, if I talk about Bharosa itself, now it's a bundle product where if you continue to kind of do a monthly transaction, keep an average balance of just 500 INR, which translates to just $7 to give you the amount basically in your account, you actually get a 5 lakh insurance for a year, right? Now it's a innovation that happened through simple communication that was received, and also the feedback channel that was generated through it, right? Similarly, I feel in everyday work that we do on the field, again, we have seen that uptake with very, very small changes, especially from agent standpoint as well. We saw the plan that I think MSC suggested to Abhinav and the team for Echo. We have also learned that as something that is working well for agents in general too. We see more acceptance, and also how they continue to engage with the end user to create that value overall for not just themselves, but the end user. Like 5 lakh, insurance is a big thing for people in rural who generally don't have access to simple healthcare as well.
Okay. So at this moment, I know we have a few minutes left. So what I'm going to do is switch modalities a little bit, and we'll turn to the chat and to the rest of the audience for some audience questions for you all. And I hope that this was, for me, I love these sessions. It's such a wonderful opportunity to hear from you all about, hey, what is keeping you up at night? What are the things that really stuck out? And again, this is more of an invitation for folks that if you do have questions, please feel free to add them into the chat. I know the MSC team, they're doing an incredible job of watching out for this. Or also feel free to raise your hand. We'll figure that out. And it looks like Anand already has a question here. And Rachit, I think this question is for you. Let me just do a quick voiceover of that question, and then it'll give you time to respond. So Anand writes in the chat, is it meaningful to insist that payment banks be asked to pay the same savings rate, interest rate as commercial banks? And I guess the question here is like, do low-income customers actually care about these interest rates? And would the savings for Airtel help push more of these savings? And does the fact that individual accounts are now replacing group savings accounts? Okay, we can challenge that, but help or hurt the prospect of obtaining credit, especially for rural women? So Rachit, over to you.
Sure. I think a very interesting question, Anand. Thanks for that. I'll probably, try and answer each one by one. So is it meaningful to insist that payments bank be asked? I think it's more of a business call. Like there's no mandate as such that's been given by any of the regulatory bodies as such. But having said that, it's an incentive for the end user to really, come and bring that habit of, or, cultivate that habit of savings, standalone. Now, if you talk about Airtel Payments Bank, I think we're the only bank which actually gives back 6%, interest if you keep your balances more than 1 lakh in our accounts. Again, first in industry, very unique, but the idea is again to, inculcate that habit of saving. Now, do low-income customers care? I think money matters. I think be any segment, right? Money matters to everyone, more so for the folks who are highly dependent on government subsidies, DBTs, and so on and so forth. So if you are able to kind of, give them some money back, I think it always helps. And also it, gives them the motivation or trust in the system that their money is not just saved, but it's also growing as well. Would these savings help push more such savings? I think it works in any other function as well. I think money never hurts anyone in any way, right? So people who have goals, who have savings, as a part of habit, they save for certain things. Like now we are trying to kind of bring in products where people can have goal-based savings, right? So think about if I take a rural example, probably they're saving for their daughter's marriage someday, right? Now, if they're able to, let's say, put in X amount each month, as a bank, we try and put, some part of it so that, it helps them get there. Now, it's though part of the saving account itself, but it's also an enabler for their end goal in mind. And last, and does the fact that individual accounts are now replacing, it's a very interesting question. In fact, we are launching, one of our SSG products where, the idea is that, such products would enable credit for rural women. I think credit continues to be the biggest challenge, more so in, tier 3+ areas. And we are trying to build models where we can kind of look at their, current state, their transaction history, so on and so forth, to build models, again, relying on a lot of, tech that has evolved. For example, if I talk about, our Indian stack in general, how from IMPS in 2009 to now account aggregators, we have seen emergence of how simple solutions are kind of, recreating or revolutionizing the whole credit chain, so to say. So we see more of that happening. And definitely, when it comes to SSG with their, simple structure, with the regulatory expect and compliances, I think it would definitely enable, credit, so to say, for rural women as well. I hope I was able to answer, Anand. If not, happy to chat more offline.
Thank you so much, Rachit. Appreciate your answer.
Thank you.
And then Rashid, it looks like you have one more question, and this is from Deepika from IDEO. And she writes, could you speak a bit to the sustainability of insurance as an incentive? And is this something that the business model can support long-term?
Thanks, Deepika. I think a great question again. I think if you see insurance, as a standalone product, if I talk about Indian market, the penetration is still very low, right? Now, that means if something like COVID happens, the stress on healthcare segment in particular goes up. Now, insurance can probably, fill in for some of those gaps that we have seen. Now, from a business standpoint, does that make sense? I think you have to, balance both the sides. Again, the idea is not just to kind of book certain amounts in our business, but also to enable these people what financial system really means, right? What financial services could really help them become what they want to become. So that enabling part is more important than just the business side of it. If the customer stays with us for their lifetime, I'm sure we'll be able to generate enough value that, this would, come out to be a net positive for all stakeholders involved. Now, if I have to just take a call on business metrics, so to say, right? Does insurance as part of the bundle make sense? Absolutely, right. If it's there has been some calculation being done in the background to ensure it can really create value for all stakeholders. I hope I was able to answer again, Deepika, but great question. Thanks.
And what I'll do is that I know we're just around time, so I'm going to just use a moderator's discretion and maybe wrap up with one question for both of you all. And Abhinav, I'll turn to you first for this question, and Rachit, you're after that. So Abhinav, the question is, if we go back to the title of this panel, it was something around CICO innovations from India for the rest of the world. At a later session, we can talk about the unique elements of the Indian market. And it's hard to even say one Indian market, given that there's so many different regional differences. But if we had to abstract this up to a certain level, what kind of advice or words of caution would you give to your peers in other markets about how they should think about improving the reach and quality of CICO networks? So Abhinav, the question is first for you, and then Rachit, I'll come to you after that.
Again, I guess sustainability is a challenge in India and across the world. And my co-founder Abhishek, many years back, gave us a mantra: go peopleless, go paperless. And it's again one of those things, right? You can just continuously work on and keep getting better at. What it typically did was it made sure that while Echo did a lot of business, we were a small and lean team. It made sure that our scalability was not directly proportional to number of hands on the job, but was really directly proportional to how much of technology and how much of ease of doing the work is getting delivered. So I think a broad advice to everybody would be economics is not easy. And therefore, technology is a great solver for that. I think it's important to understand the technology and know how to use it. It also, one of the things that we are experiencing now is that one is to kind of reduce people paper. That's one perspective. The other perspective is that the more technology interfaces appropriately with the end user of the technology and not human beings, that's when there is standardized delivery of services. Right? So, the reason why bots are getting popular is not because they're bots, right? Systematic, timely delivery of information can happen. But the same thing when a human being is present, you've got to train the human being. One human being may be slightly different than the other in terms of responses, etc. So I think my core advice would be adopt technology as much as possible to make sure that automation is pushed. It's not people dependent when it comes to scale. Helps both economics perspective as well as scalability of the entire process in organization.
Great. Thank you, Abhinav. Rachit, over to you. Same question.
I think Abhinav covered mostly, but I'll just add additional layer. I think if you see any system from people, process, technology standpoint, and we have seen the evolution more so in the Indian market, than let's say West part of the world. Something that I feel and strongly believe is leveraging data on top of tech as well, right? How we can use AI, ML, and continue to train those models to give those insights where we continue to kind of reimagine how financial services are delivered, and also at the same point make it more sustainable for the agents to be able to continue to deliver those services. Like what incentive structures we can then create, what sort of bundles would really emerge that would support the aspirations of the end user, and also how from economic standpoint, right, unit economics I'm trying to convey, continue to be focused on, so that again, that sustained value, like Abhinav said, continues to be generated throughout.
Great. Well, both, thank you so much for your perspectives on this. And if I had to close, what I'm carrying with me as a result of this conversation is are a couple things. One is when we talk about the role of CICO networks, we can look at it from a number of perspectives. We can look at it from the critical role it plays in the broader value chain for financial inclusion. And I think for many of us who work in financial inclusion, it can seem very wonky, very theoretical. But what I love about this conversation is it highlights it's more than just a conversion function between physical and digital money. It's also an employment opportunity or income generating opportunity. There are real people with real lives like embedded in this model, and like the humility that you guys bring to this, I think is just so central and core. So I just want to really highlight that and just like thank you both for that. And second, it also talks about how hard this business is, right? Abhinav, I think it's just fun to be like, hey, 15 years back, 15 years forward. But I think what that's really calling out is there needs to be almost a constant vigilance and constant monitoring of data and listening to your customers and agents figure out how do we improve their business, how to improve the experience so that people can access their money when they need it, so that they can actually earn a living. And I think these are the really human elements of this that I think are just so compelling. So thank you both for your perspectives. I know that there are a few more questions in the chat, so I'll encourage you both to stick around a little bit longer. And if you can respond by chat, that'd be great. But I'm sure that the MSC team will also figure out a way to both collect all this input and also send out this input. So thank you both for your perspectives. And Akan, back to you.
Thanks, everyone.
Thanks, Dave, Rachit, Abhinav. Thank you so much. Such an interesting and engaging conversation. I almost forgot that I have to come here and speak again. So yet, I mean, we are in for another interesting and engaging session. And this is on supporting CICO agents for an inclusive last mile delivery for financial services. I would like to invite Graham, who is the moderator of this session. Graham is the founder of MSC. He has over 30 years of experience. I don't know how much do I talk about Graham. So, and I think time is also less, so I wouldn't. But yeah, he has been guiding and leading all of us to some of the great works that we have been doing. Thank you, Graham, and over to you.
Great, thanks very much, Akand. And yeah, absolutely, the less you talk about me, the better. I'd much rather talk about my stellar guests. And my stellar guests on this panel are Hilary Miller-Wise, who leads the team at BMGF that focuses on development, distribution, and use of financial services for the unbanked, especially women. Welcome, Hilary. And our second guest is Samuel Broman from Kunda, who actually, in his misspent youth, has worked for at least 2 significant CICO networks in Africa, Tanzania. I think, sorry, Africa, particularly Tanzania and DRC. So welcome to you, Sam. And then finally, a very special and warm welcome to Sanchita Mitra from Sewa. Sewa Sartak is an agent network manager that has over 40% female agents. And that's really important in India, where the average is around 10%. So welcome, Sanchita. We have a challenge. Dave has just moderated a panel with such energy and enthusiasm that I'm positively awed. And so now we have to match that. So let me kick off straight away, if I may. We're a little behind schedule, so I'm going to push on. Today's session, as Akan said, is on supporting CICO agents for an inclusive last mile delivery system for financial services. And for me, the key word in that is inclusive. So we'll try and identify the factors that are essential for an inclusive and effective CICO network. And we'll keep a specific focus on women agents and talk about the challenges that providers face when recruiting and onboarding women agents. And then perhaps we'll look also at how technology might help provide better financing opportunities for agents, particularly women. So Hilary, I'm going to put you on the spot first, if I may. You spent most of your career at the intersection of financial services, agriculture, and technology in emerging markets. And if we look at GSMA's 2021 State of the Sector report, we know that there are about 9 million registered mobile money agents of which about 5.2 are unique and 4.8 million are active. So agents are expanding at a very rapid pace, but this is typically limited to urban and peri-urban areas and at best the larger rural towns. So what are the key challenges that limit the creation and expansion of CICO networks to offer inclusive financial services to the last mile?
Terrific. Graham, thank you so much, and thank you to the whole MSC team for this session and for inviting me. Let me touch on the challenges in the way that I think about them, many of which I know were touched on a bit in your last session. But I'll start off by saying that we know that CICO agents and mobile money agents are absolutely vital to driving access and usage of digital financial services, which can seem a little counterintuitive because you need the physical networks to enable more digitization, right? And that's because, of course, most people still earn and spend in cash, right? Cash is king, especially in rural markets. So to your question around what are the challenges to expanding into the last mile, I'll touch on four things very briefly. The first one is demand. Especially in Africa, when you're talking about rural markets, you've got very low population density, which is different from many parts of India, where on average, rural population density is higher. So you have a larger catchment area of customers, or larger density in the same catchment area. The second is limited use cases, right? I mean, if we think about G2P payments that the Bill and Melinda Gates Foundation has been working on to really drive, many people just cash out right away because there isn't really then a follow-on use case for them. Merchant payments, especially in rural markets, as we know, are pretty few and far between. Still on the demand side, I would say customer awareness, and I think this was touched on in the last session, and Dave mentioned, around designing for this type of customer and making the customer aware of the service and making them comfortable with digital. The last one I would say on the demand side is social norms, right? If you consider countries like Pakistan, where women's mobility is more limited, it makes it quite difficult for women to be able to easily access, if there is an agent network, to be able to easily access that network. But certainly if she needed to travel a distance to get to a CICO point, there would be restrictions on her ability to do that. The second challenge I would say is really around the business models. So, a lot of, obviously, especially rural agents, it would be very difficult for them to be able to even break even with the number of transactions that they could do on average in a day. And this is something that BCG study that you referenced really spoke to, is quite a number of agents that are needed and locations that could use an agent, but unlikely that they would be financially viable. But even in urban areas, I would say, my home currently is Kenya. And there you've got a lot of cases in urban and peri-urban areas where you've got M-Pesa agents kind of stacked on top of each other. And when there's that much competition, it becomes very difficult for those agents to manage. Finally, on business models, the lack of affordable financing for agents. And it's not just, there has been a focus of late with different financial providers on giving overdraft facilities to agents that are already in existence. But what we also need is to inject capital into the system to get new agents, right? So getting working capital loans for new agents to be able to start. The last two that I'll mention, one is regulation and the other is rural infrastructure. So on regulation, we know that especially in rural areas, a lot of people just don't have the ID that might be required to be able to conduct a transaction. And without more flexibility on that KYC requirement, it makes it very difficult for people to access. But similarly, and I think this is especially true for women, insufficient consumer protection and redressal. Especially for women, there's a lot of mistrust in these digital systems and digital financial services directly. And so, women especially, but many people who are unfamiliar with what the pricing is will sometimes get cheated, and then there isn't a way for them to seek redressal. So that lowers trust overall in the system. The last thing I would mention is rural infrastructure. Where we don't have good connectivity, obviously that's really going to hinder the ability of agent networks to expand, but also the limited supply of rebalancing points. If the CICO agent has to shut down their shop and travel a long distance to be able to rebalance, that's really going to impact not only his or her business, but obviously the customer's ability to use that network. And all of this then really drives up the cost. So again, referencing that BCG study, I think there were many insights in it, but two really interesting insights related to cost is that all of these factors drive up on average the cost of rural CICO agents relative to their urban counterparts. And the two I want to mention, one is just account network management and marketing costs that are involved are increased by about 35% on average. But even worse is liquidity management. It goes up almost 70% for rural agents. And so it just doesn't become viable for a lot of these players. Now that might sound like a lot of doom and gloom, but we'll talk in a moment about some of the things we can do about it.
Great. I mean, that is such a useful and coherent summary of the challenges. One of the things that I find fascinating is how actually running through almost all of those are the problem of trust. Perhaps not just because of customer service and consumer protection, but also because of lack of familiarity, because of poor communication, something that Airtel is addressing right now. And as you say, use cases as well. And indeed, if an agent is not able to rebalance, then when the customer comes to make a transaction and there is no liquidity, that again burns trust. So thank you so much, Hilary. Sanchita, I'm coming to you because I know that you've at Sewa have faced your own challenges while setting up your remarkably inclusive agent network. In fact, that we found when MSC did some research that about 90% of providers mentioned that they needed to channel more effort and resources into identifying and recruiting women agents. Their challenges included need to convince family members during recruitment, the mobility and safety challenges facing women agents, particularly when it comes to rebalancing. Women have fewer working hours available because, of course, they still have a much greater burden of domestic responsibilities. And of course, often women are more challenged by technology and digital capability. So I assume you must have faced very similar challenges in your journey while selecting, recruiting, and onboarding women agents. What happened, and how did Sewa address these?
Thank you, Graham. You have made me feel very nostalgic, and thank you, Akhand MSC, for giving me this opportunity. I remember when we actually first started it, and we thought we will have only women as agents because we were from Sewa. So there were a lot of criteria like education, etc. But there was also a criteria for having a little bit of money to buy a POS machine. It was initially a handheld device only. So we really had to convince the women, the men, and the safety issue. And let me also give a background. Sarthak works in a mountainous state, which is Uttarakhand and Punjab. Now, when we started, many of the families said that the nearest bank branch was about 30 kilometers away. And the population is mostly poor, is mostly old people. So a lot of pensioners were there. The young people, because of lack of work or because of lack of productivity in the agriculture, they migrated to various other places. So the service was to poor people who obviously could not walk, and obviously the place also could not provide transport. The safety issue here was a very peculiar safety issue. It was of wild animals. It's full of leopards, and it's a mountainous, beautiful place, but these are the risks. Yet after a lot of convincing, we got very, very encouraging women. And as you rightly pointed out, the care of the house is a big responsibility in the Indian scenario. So there were women who said, I used to ask them, how do you manage? She said, I get up at 4 a.m., cook for the entire family, then take this bag. And then it was a doorstep service those times. She used to visit all those people, then come back in the evening and again cook and be prepared for the next day. But you know, the amount of, first of all, we used to choose women who had some leadership quality, where the community had some kind of a trust. That took us some time to understand that this particular woman would be good. But the community belief in her was a very motivating factor. She earned very little, but she had that feeling that my village people are benefiting out of this. And when the people used to get the pension on time, the old age pension, that was very, very enriching and very, very satisfying for her. But of course, she needed money. Now, I still remember in 2016, I actually was mentioning about the challenges, and today in 2022, I think the challenges have increased. Sarthak is working with the nationalized, one of the biggest nationalized bank of India. And the rates, instead of increasing and instead of becoming encouraging, the rates of commission have decreased. Now, particularly with women, what happens, there's the investment part. Women are not ready to, in fact, the family does not support the women to invest so much. The initial investment was only 25,000, and I would request somebody to convert this into dollars, 25,000 rupees. But then it grew to by 5 times now, because all the infrastructure which a normal bank used to have, like the printer, the scanner, the fingerprint device, the check, the counting machines for cash, etc., is to be bought by this customer service point or this agent. And this kind of investment was very difficult. They are not being able to break even. It is very difficult. And because I'm talking particularly of this region, and why? Because region-wise also the commission structure has to be different. This place has very low density of population, like Hillary was pointing out. So the bank has to see that the commission structure has to be different for fragile states, for difficult, low density population is the same. This is one difficulty they faced. There was no training facility. I mean, it was all in-house training that we were giving, and the women were a bit shy to also meet the branch manager. There was no effort from the branch manager to meet these agents. So till today, many of our agents do not even know the branch manager. They do not. So this is something I think we need to build up for the women. Now, everything is not gloomy. What happened during the COVID, because in the meanwhile, the system of POS turned to a kiosk, which was an immobile kind of a machine in her office. So during COVID, that doorstep delivery system was very, very necessary, because the pensioners had to get the pension. that was the time when our women CSP, now we have 40%, as you said, as women CSP. All the CSPs, they carried the laptops, the printer, the fingerprint devices, everything, and they traveled in these mountainous terrains to meet the pensioners, to give the pension. So there are many stories, many things that kept them motivating. Actually, the customers kept them motivating. It is not the commission structure. So I would say that to keep women in this business, and it is and women do have that issue of building up trust, and they also have a social phase. They build up that social phase. I think it needs to be incentivized. During COVID, there was a little incentive that was given, and the transaction rate was very high. Whatever the government also introduced as a COVID response, as a scheme of cash transfer, that also reached to each and every family in these places. So I think these people, these agents need to be incentivized and they have to be recognized. Now there is no platform where these voices can be captured. This is very important. The last mile delivery agents' voices need a platform.
Sanchita, that's a great overview, and you raised some really important points. I remember, gosh, 5+ years ago, working with Dr. Pawan Bakshi on exactly this issue of commission rates for G2P payments, because they're still, frankly, too low, and particularly for rural areas. And as Hilary was mentioning, if you have to travel 30 kilometers for rebalancing your liquidity requirements, then that's a huge cost, both in terms of time and indeed transport costs. So that's a really helpful overview. Thank you so much. I recently read a blog mentioning how providing sort of motorcycle or bike loans to women agents can help bring financial inclusion to remote and vulnerable segments. And I'm aware that the SEWA team have also mentioned the need for women-friendly loan products. And it seems to me that financing of agents, even for male agents, to meet their liquidity or their working capital needs is really important. And in India, we have these differentiated types of agents, and your agents are working for banks. So they have to carry all this laptops and printers and, so much paraphernalia that it represents a very significant capital investment. And compare that and contrast with some of the new agents that Anil was talking about in the earlier session, and you wonder how long this, can go on, and whether we can't find additional revenue streams for agents that are working for the commercial banks that demand so much paraphernalia, that make your women agents need to be bank branches on 2 legs. Anyway, let me turn to Sam and talk about financing for agents, because Kunda provides loans to existing agents using a data algorithm that's, naturally identifies and promotes good agents. Sam, I know that you're operational in Tanzania with M-Pesa and in Pakistan with OneLoad, which is a bill aggregator, and are also planning other launches across Africa. Tell us a little bit more about how the Kunda product works, and also if you think it needs customizing for women agents.
Okay. Can you hear me well?
Yep.
Okay,
loud
great.
And clear.
So thanks a lot for this. So very briefly on our products, and then I'll talk about the second question. So first of all, we try to mainly at the beginning when we launched our company to really focus on productive loans. One of all, the big worry we had, especially with digital loans, is that one of my fear is to see people being over indebted, taking the wrong loan at the wrong moment, not sure exactly what the terms and conditions are. And I personally feel that is a risk, and that is happening in some part like Eastern Africa. People take a loan too quickly, and then they take it to repay another loan. And then after they're bought from a credit bureau, and when they then need to take a productive loan for their business, for some reason they are barred and they don't even know why. So we really try to be really fair and safe. And that's one of the beauty of digital finance is that it is possible. Let me give you a quick example of how one of our products is built. So one of the products that we do is we finance transactions, but we finance transactions that are generating a commission. Now, because we will only finance these transactions that generate a commission, and we know what is the commission that they earned, we can always put our fee to be always lower. So it means that if you don't use it, you don't pay. And when you use it, you always make a net profit. Now see the difference when you go to a traditional bank or a traditional loan. If I go to a traditional bank and I say, okay, I want to take $100, whether there is COVID, there is rain, demonstrations or whatever, and my business doesn't work this month, I need to repay the principal and the interest. Whereas here, because it's digital, we only finance while the customer is in front of you asking for that transaction that will generate a commission for him. So this is sort of the way we try to design all of our products, whether it's for agents or for merchants. We try always to be what we call revenue accretive, so they will make money. And this helps us make sure that they are never over indebted. So that's a bit around our products. And what we do, as you said, is we do provide overdrafts, so it means we finance transaction, and term loans, which means they can take the money for whichever purpose they want. As Hilary mentioned, most of the loans that we provide are for agents that are already active. And so now I will come to your second question. One of the main reasons why we do this on purpose is we want to avoid adverse selection and moral hazard. If you put a loan on the table, imagine that you have a good-hearted agent who doesn't have bad intentions, and he, without the loan, would probably be good. Now he has something on the table that could divert, and imagine he has problems at home. He needs to go to the hospital. He needs to pay school fees because something happened in his family. Now there's this loan on the table, and he can take it and try to divert and cheat the system. One of the things is we don't want him to take it, divert it, use it for the wrong purpose, and then be bought from our algorithm. Because this will divert someone who had a good opportunity to become a good agent, and then will just be barred from the system. So we want to try to make sure not to push people to go in the wrong way. Now coming back to your question, I think your question was, okay, should we design something specific for the woman? A quick example of how I want to address this question. I think it's not as easy as that. When I was in DRC, we had about 5,000 to 10,000 active agents when I was managing Tigo Cash. Most of them were women, but they were not women. So we were proposed a lot of incentives by NGOs and others to hire more women, and I always refused them. Why? Because it would lead us to select the wrong people. The reason why I had selected women is that I had seen that they were most trustworthy, and there was less fraud within the network and with customers when it was women. Now, if you give me money to go and hire more women, one of the risks could be that I select the wrong ones. One of the risks is that you attract people who then want to game the system if your incentive is not well aligned. And this happens a lot when you create incentives. It's never 100% gaming proof. People can come and find a loophole and game it. So this is one of the risks. So one of the approach I would take is to use data. And instead of having your algorithm biases to say, okay, let's give more to women, it would be to say, okay, let's go the other way. Let's see if women are better agent on certain dimensions. Now, in order to do this, you need to know who is a woman. And that is not always easy to collect. The first issue we have is first the KYC collection, because what happens in a lot of culture is that it's the man who signs. He will sign the contract for XYZ reason. And then the second issue is the difference between the agent, the owner of the entity, and the operator. Now, who is it that we want to help? Do we want to help more entrepreneurs launch their own business? Because it's two different barriers. For the agents, it's usually, as we said, having the initial capital, and there we can definitely help. And the way I would say there is to design experiments and see what works, what doesn't. The beauty with now technology, it's very easy to, to do control groups and have different sub-products to test. And then if we want to help, so not the owner, but then the operator, there it's different kind of barriers that we have to put down, which are more related to education, awareness, and so on. So I think it's not that an easy topic to address. I think there's a lot of sub-tests and sub-topics to address, and rushing too fast to a solution might lead to, as I said, adverse selection and results which showed an opposite element. But overall, from my personal experience in the RCN when I managed the thing, yes, I do think that in a lot of places where I managed them, women were more trustworthy, and therefore it was definitely worth looking into. And I would say not promoting women and agents, but promoting trustworthy agents who in this context in DRC happen to be women. So that's how I would approach it. And just one last point, that we mentioned something very important, Hillary and other people mentioned it, the cost, especially the cost. So as I said, we always try to make sure that our loans are very cheap. And I think we have in some of our products some of the cheapest loans, and especially when they are revenue accretive, it makes them safe to use. But when we talk about rural areas, I think one of the major issues we do when we develop agent network is we link the informal sector to the formal sector. It means that the agent has to go to a bank branch or to a super agent who's usually a big shop to rebalance. Now, one of the things I have observed, and it might not be in every country, is that even in rural areas, there is cash. It's just that it's not linked. So what I think we can do is, instead of saying to the people in rural areas, come to the city to exchange, it would be look into your area, into your rural area. Is there anyone who has the opposite problem? And it's quite easy now with the apps to connect people who have an excess of cash with the people who have an excess of e-money. An agent, a cash-in agent, an agent who does a lot of cash out, at the end will have a lot of e-money. And the retailer next door, he has the opposite problem. He has a lot of cash. He's sold all his Coca-Cola and chicken. He has a lot of cash. Why don't we pair them together on an app and say, cool, let's just exchange. This would drastically reduce the cost of transacting and having rural agents, and therefore would enable more people to have a sustainable business and enter that market.
Thanks, Sam. Yeah, that's great. And two things that I'm taking away from this. I mean, the first is that not only do our work has shown or suggested that women agents actually very often provide a more valuable, patient, trustworthy service to not just women clients, but also men clients. But you're also adding to that they are less likely to be part of what is a growing fraud problem across agent networks. So I think that's really important. The point you make about cash in rural areas is really important. I remember looking at some of the results of the ANA surveys, the Agent Network Accelerator surveys that we used to do, and being amazed because there was more in some areas, some rural areas, there was more cash in than there was cash out, which is counterintuitive to what we've all been taught to expect in terms of agent behavior. So you're absolutely right that we need to look carefully at, what how to track down excess cash in rural areas and help people rebalance through perhaps less traditional methods. Hilary, I know you have to go at the top of the hour, so I'm going to come straight to you, if I may. And you diagnosed the problems in a beautifully structured manner. Tell us about the solutions to those problems. What must we do to build more inclusive CICO networks?
I definitely don't claim to have the silver bullet, but let me talk about a few things that we think about. And I'll try not to repeat what's already been said. There are a couple things that have been touched on that I think are really insightful. On the demand side, so starting thinking about the customer view, Dave had already mentioned designing for the users in that catchment area, right? And the realities that they face, whether it's women with limited mobility, whether it's smallholder farmers with low levels of financial and digital literacy, et cetera. We have to meet the customer where they are. I think we also need to raise awareness about DFS broadly and agent networks. And that's not just about raising awareness about the location and how it works, but also empowering the customer to know what the fees are, right? And so that they can also protect themselves against the kind of fraud that you're talking about. To the second point on business models, we know, and Sam touched on this a little bit, we need to aggregate financial and non-financial services together, right? So a lot of the use cases for agents, especially in rural areas, are P2P, utility payments, and airtime top-ups. But we have to be thinking about how many different services can run through that same point to make the business model viable, right? So one example would be with agri-vets in rural areas that are already selling fertilizer, seed, et cetera, to the same customer. Many of them in East Africa would also be, say, an M-Pesa agent or a mobile money agent. How can we expand that kind of aggregated solution in lots of different markets, where it's not only those basic transactions, it's merchant payments, which is really kind of the holy grail, and where we need to, what will ultimately drive volumes, but we know is very hard for a lot of reasons. But services, as I mentioned, like G2P, savings, credit, insurance, right? All of these services and payments in both directions being made at those locations. I think, non-financial services, if I come back to the agri-vet model, could be extension services that retailer is providing. And it's another service that makes the overall business more viable. The point about women agents, I really appreciated what Sam said. I do think that, generally we want to look for opportunities to increase women agents, but that doesn't mean that those women agents are always going to be viable, nor does it necessarily mean that women customers are going to be able to transact better. But I think there is some assumption and a bit of data to suggest that it would actually help in certain circumstances women customers to transact. Some work that our team in India has been working on is with the Department of Finance, which recently announced a commitment to actually mandate that 30% of the agents are women, which is fantastic. And we're thrilled about that. Number one, we have to get it executed. And number two, we have to make sure, to Sam's point, that those agents are the right agents and they're the best ones and they're well-trained, et cetera. Improving agent incentives. I'm fascinated with the model of WAVE, where they basically looked at some of the ways that MNOs are rolling out their agent networks, and they sort of figured out ways that it's not working, and they've improved upon it. And some of the ways they've improved upon it is to make sure that there is a viable catchment area for the agent, that agent can actually make money in that area. That there isn't, there aren't a whole bunch of agents on top of each other and all competing for a small number of customers. And they give tremendous customer support to their agents, which I think is a really interesting model. The last one on the business model side is access to finance, obviously, and again, Sam touched on this. It is overdraft, it is also working capital, and more could be possible. A few things I'll touch on the regulation side. So I mentioned on IDs, more flexible ID requirements, better consumer protection. We can talk a little bit about mandates and subsidies. It's tricky, and those of us who understand the business model and the challenges that companies have to build these networks, it can be challenging if there's a mandate that requires coverage in low income and low density areas. You simply can't make money. And so what are the options to make sure that those agents can be viable? A subsidy for transaction fees or income guarantees is one model. Lots of pros and cons to that, so I'll leave that there for the moment. Finally, what I would say is on infrastructure, right? Interoperability is absolutely key, and it's not, in my view, and I think this view is shared by others, it's not happening as quickly as a lot of us would like. And it really is essential to making these agent networks work, especially in rural areas.
Great, thank you, Hilary. I mean, that's a really good summary. Now I'm going to turn first to Sam in order to allow Sanchita to have the final word, because I think it's always good to let Sanchita have the final word on these types of issues. Sam, what would you add to Hilary's magic silver bullet recipe that we've just had?
Sorry, yes. Totally agree with all those points. I think, and Hilary touched slightly on one of them, and I think it's really worth looking more into it, especially now that we are more and more based up, is intelligence and recommendations we can give to the agents. So for example, hey, this is the first Monday of the week or the month. Usually there's a lot of cash outs, or there's a lot of people buying airtime or whatever. Based on past transactions, you don't have enough to serve your usual transaction base. And this is, we're really talking about agents more and more, especially here in Pakistan. I see agents are also merchants, they're also retailers, suppliers. So all of these are connected. So one of the points I would say now, with all the data we have, well, everyone has, is trying to leverage it to give advices to these agents as to where to locate. So for example, we do this with bank and with MNOs to tell them, we take all the data available in the country and we tell them this is where it would make more and more sense to make an agent, especially so that they don't eat each other's profits and it's not a race to zero. The second one is, as we said, suggestion on float balancing. Hey, you don't have enough, but it can also be opening hours. Hey, did you know that if you open one more hour on Friday evening or on Sunday afternoon, you could X, Y, Z? And obviously after, it's up to them to choose, but it's to guide them and also to give them, sometimes it's as simple as giving them feedback on their business. Did you know that you grew this much by opening one more hour there, or by serving these types of customer, or by going there, or just analytics on what is happening in their business? Usually they have everything in their head. They have a mini algorithm, they have everything there. Sometimes helping them to put it on, a little screen, I think can go a long way. It doesn't cost anything to anyone, and it can really help a lot of people. Yeah.
Great, thank you, Sam. Thank you, Sanchita. What else would you like to see change to empower and enrich your women agents?
I would like to turn the lens to the users of these services. So if these are villages, there is a basket of services that is rarely required. Like for example, government introduces various schemes, subsidies. What happens is there is a lack of awareness and a lack of access. Now, if these two can be combined, the financial services and these services, then there will be a holistic approach. It will be a win-win situation for the users. And if these are also incentivized in a right way, then it will be very commensurate with her kind of investment that the agent is making. And it will be also useful for the government to reach the last mile, not only for financial services, but all kind of awareness and services that is required. So this is one thing. There is a program like the Common Service Center. If the Common Service Center and the banking agent can be combined, I feel, and that would be a good solution to help the entire economy.
That's great, Sanchita. And actually, you've just made a point that I was going to make, which is that building off what Hillary said and what you've just said is what we referred to in 2017 as the universal agent, the agent that offers a big package of financial and non-financial services. The way that we've always conceptualized it is that you have those, and those are what we call sales agents. They offer a broad range of products, and they sit in the market hubs, because rural people very often might go to market hubs on a weekly or a fortnightly basis and can make those big decisions at those universal agents on those trips. But the day-to-day transactions, you need the agents further out, and that's where you have what we call the transaction or service agents, who will sit in the villages at the little local shop and so on and so on, in order to service those products and services that have been sold by the sales agents. Now, I'm aware that both Dave and Hillary have to run, so thank you so much to both of you. And let me also thank you, and Sam seems to have disappeared on us, so it's mass migration on the hour. So thank you all so much. Sanchita, thank you. Thank you to Hillary, and thank you to Sam. Great discussion. Back to you, Akand.
Thank you, Graham. And what a fantastic discussion. And of course, I mean, we could have spoken for hours on this. Thank you, Hillary, Sam, and Sanchita also. So with that, we conclude our webinar. But I'll hand it over to Manoj Sharma for his closing remarks. Many thanks to all of you, all moderators and speakers. Over to you, Manoj sir.
Thanks, Akand, and thanks everyone for joining in. Thanks to Pawan for kicking us off, giving us an overview of what all is going on in this very complex CICO universe in India, and the sort of experimentation that is going on. In fact, the next panel, after Anil presented and gave an overview, and diced the different typologies of agents that we are seeing, the next panel discussed about some of the experiments we are doing. We spent a lot of time with both Pawan and Prabir mulling over those experiments, trying to break our heads on where they are going. At one stage, given COVID, we were not sure they'll lead to anything. And of course, for Abhinav, Rachit, these are people in the thick of operations. I mean, they are not just running one experiment for BMGA, for a MicroSave. So for them, there is so many of operational challenges that, getting them to spare staff, their own time to get focused and to get some results, because obviously they are spending a lot of time, energy, and money in each of these experiments. So I think thanks to that, we had a great panel discussion with Dave, Abhinav, and Rachit. And I think Dave's point about designing for users in the catchment area, I think that's the key. Eventually, it's not one market. And I think Hillary also made this point that markets are so different. I mean, Africa, Asia, you can't compare. Sanchita also in the next panel said that even in India, a hill area and a plains is so very different. So I think great panel discussions. Point Abhinav made about that we were solving for the same thing 15 years ago, we'll be solving for it today and maybe again in the next 15 years. And the whole thing is that customers are changing, technology is changing, the business model is changing and regulations are also changing in some cases. So I think that's fascinating, because we are trying to up the bar with every change that is happening. And I think in the panel discussion that Graham moderated with Hillary, Sam, and Sanchita, I think another great discussion. I especially like the point that Sam made, that we are looking for trustworthy agents. It just happens in that some countries, or maybe in a lot of countries, these happen to be women, and that's where we're trying to solve for a lot of problems that these agents face. And of course, Hillary gave a global account of the challenges that are there, limited use cases, population density, the social norms that prevail, and so on. And also then gave some of our ideas around bundling of services, around coming together of agents, bringing in merchant payments to bring about the volumes that will be probably needed in rural areas. And then of course, Sanchita brought in this very grassroots level experience about how it actually works. How does a woman who hasn't done a business earlier to manage a family is willing and able to do it in a setting of an Uttarakhand, a hilly state in India? I think fascinating discussions all through. Thank you so much to the panelists, to all participants for joining in. Great having you all. Thanks so much.
Thank you. Thank you, Manoj sir. Thank you, everybody, for joining us in. I hope you liked it. The link to the YouTube recording is available. I have put it on the chat window. And wish you a good night, good day, wherever you are. Thanks again.